Welcome to your March 2023 real estate market update for Frisco, Texas. The two biggest challenges that our local real estate market is still facing has to do with mortgage rates and inventory. There's simply not enough homes for sale currently. And so many people have been predicting, for months and months now that the market was going to go into a free fall and absolutely crash. And that hasn't happened. But mortgage rates and inventory are playing an impact in our home prices. So what is that impact and what are home prices likely to do in the months ahead? That's what we're going to talk about in this month's update. Hi, this is Andrew with the Andrew Smith team here in Frisco, Texas. And as I mentioned, mortgage rates and inventory are the two biggest challenges we're facing here and across the country to do with mortgage rates and inventory. So when we look at mortgage rates, as we all know, the last couple of years in real estate were absolutely crazy. And last year, at this time, bidding wars were in full strength. I mean, multiple offers were happening all over the places. Prices were being pushed up ridiculously high, but you also had mortgage rates starting to climb. And that culminated later in the year with interest rates going over 7%, the highest they had been in decades, which certainly impacted demand, caused buyers to pull back, rightfully so. The thought process at the time was as buyers pull back, as inventory would continue to build, so there'd be an abundance of supply with low demand, causing the market to implode. And as we all know, that hasn't happened at all. Now it did impact pricing, and it continues to impact pricing today, which I'll get into in just a minute. Now, those mortgage rates, after peaking in late November 2022, they then started to fall. And as they fell, demand came back pretty quickly. The market was very, very active all the way through the end of the year. As a matter of fact, we saw quite a jump in activity right at year end. But for the past month, we've seen mortgage rates start to climb again. As a matter of fact, last week they crossed over 7% again for the first time in quite a while. And that's definitely had an impact. But mortgage rates did start to fall this week. They came down, as a matter of fact, today, mainly due to the bad economic news that came out last weekend with regards to the failure of Silicon Valley Bank. Prior to that, mortgage rates had been on the rise because the economy is still doing pretty good overall. Inflation is continuing to be sticky, and high inflation is the enemy of long-term mortgage rates. Now, it is widely believed that the Fed's actions are starting to play an impact, and they are starting to cool things down, which should cause mortgage rates to generally continue to fall further this year and then towards the end of the year, which will only help with regards to demand. Now, on the supply side, inventory, that's been a big challenge because one of the things that was expected is that inventory would continue to build last year as demand went down, and it flat out didn't. Sellers simply decided they weren't going to sell. I mean, the people that were locked in, at a 3% mortgage rate, they were good. We're going to stay where we are. We're not going to put our homes up for sale. And that caught everything perfect timing, if you like, because the builders had already started to slow production down a little bit. So you had this crunch where inventory was falling across the board. So here's a slide right here that shows the month over month change of inventory from January to February 2023. And as you can see, the entire country is orange. And orange basically means that month over month inventory fell anywhere between 0 and 15%. The only exception to this was Hawaii. Hawaii actually saw inventory increase month over month. Now, when you actually look at inventory on a broader scale and you look year over year, it's completely a different picture. So I'm going to share my screen with you now and show you what it is I'm talking about. All right, on this screen here, we're now looking at the inventory here in Frisco. And as you can see, inventory, as it's been reported on the news, is up year over year. As a matter of fact, here in Frisco, it's up 100% year over year. So right here, inventory is at 241 homes for sale. Now, although inventory is up year over year, you can see that it's actually been falling since last July. Now, when you go back 2 years, as I mentioned earlier, the last 2 years are kind of an anomaly. That's not normal real estate markets. And although our inventory is up compared to 2022, this chart here, I've gone back 5 years. And look how it is compared to 2018. In February 2018, there were 826 homes for sale. In February of 2019, there were 962 homes for sale. February 2020, there were 704 homes for sale. So when you go back pre-pandemic and look at the amount of inventory, the number of homes we had for sale here in Frisco compared to where we are now, you can see that we're nowhere near where we need to be. And we all know, just look at the roads, look at everything else that's going on. The population here has increased. There's more people here. That is why you haven't seen just a free fall in home prices as many had been predicting. So what are home prices doing, and how is the inventory and the mortgage rates impacting home prices here locally? Well, last month painted an interesting picture. So let's look at the median sales price here in Frisco. Again, I'm going to change this from, we don't need to go back 5 years. We'll just look at the past 3. Prices here in Frisco peaked in April of 2022 at a median sales price of $760,000. This coincided with the end of the bidding wars, so to speak. And this is when buyers really started to pull back. And from that time, we actually saw prices fall all summer until August. If you've seen any of the videos I've done before, you'll know that August was the time frame when we basically bottomed out and we were treading water. So here's, September, October, November. And as mentioned, mortgage rates came down starting in November last year. End of October, November, they came down. And as a result, the builders were offering some pretty nice incentives. They were offering mortgage interest rate buy downs, and it actually caused a flurry of activity, which caused our median price to jump up again in December. As a matter of fact, many of the builders reported record sales. The market here was very, very strong. We basically held steady in January, but then had this big drop in February. In fact, prices went from a median sales price of $700,000 in January all the way down to $600,000 in February. That actually represents a drop of 22% from our peak here in Frisco, which is basically at the max amount of real estate price declines that any of the forecasters, the experts out there, were predicting, even the most pessimistic. Now, to be honest with you, personal opinion, I think that drop in February was a bit of an anomaly due to the mix of property that actually closed that month. The reason I say that is there's not any other data to kind of support a continuing decline in pricing in that way. I fully expect come next month, we will actually see that this turned back up again in March. Now, again, only time will tell, but here's why I say that. If we look at the number of pending sales, yes, it went down in February, but it's still up year over year. Okay, these are the number of homes going under contract. When we look at closed sales, the number of homes closing, we turned up again in February as well. And when we look at our supply, homes for sale, you can see that we've only got a 1.1 month supply of homes for sale here in Frisco. And that's really low. For all intents and purposes, 6 months worth of supply is what's needed for a market to be considered balanced. Now, if I switch gears for a moment here and I look at my local market report for Frisco, and I've got a link to this report here in the description below. You can search for Frisco or any city or zip code in the entire country, actually, right here, and even subscribe to this report so that it's delivered to you each and every week. Now, the thing I like about this report is it is updated weekly. And this first thing that you see on the report here is the market action index. Think of it like a speedometer. The further to the right this goes, the hotter the market is, the more upward pressure there's going to be on pricing. As you can see here, the market action index increased from 53 to 58, meaning that the market is actually getting hotter. I can tell you just in the last couple of weeks that I've had multiple reports of multiple offers appearing once again. Not necessarily bidding wars. Prices are not getting bid up way over the list price, but we are starting to see multiple offers on certain properties. Now, you can also see here that this is showing again that inventory continues to fall. So, the report that I showed you just a moment ago was looking at February's numbers. As we've moved now into the middle of March, we're still continuing to fall with regards to inventory. And lastly here, when we look at the median list price, the median list price is showing where prices are at on properties coming to market. And you can see this is holding fairly steady. As a matter of fact, if I look at the 7-day trend, right, we can actually see that they ticked up slightly. And whereas you look at the 90-day, you look at the 90-day average, they show that they're not going down. All of this is holding steady. Okay, which indicates to me that pricing is not going to take another fall in the months ahead. And then lastly here, if we just look at the inventory for a minute, you can see very, very clearly that inventory here continues to fall overall. So with that in mind, what does that mean for home prices? Well, and what should you do? Is now a good time to consider buying a home? Well, this is the latest estimate of national home price performance going forward. Okay, so here's this chart here. So it can show us nationally, this is December to December. This was forecast in the last quarter of 2022. And it's showing that they're forecasting prices could decline about 1.6% nationally in 23. But then prices are increasing each and every year following that. Now, here's something to point out, though. That's nationally. And as we know, the market here in North Texas, Frisco especially, is not performing exactly like nationally. It's much, much stronger. As a matter of fact, the latest forecast from Zillow is forecasting locally Frisco to have price appreciation of 5% in 2023. And that's forecast to continue out over the next few years as well. So what does that mean if you've been considering buying a home? Should you or should you wait? Well, mortgage rates are high for sure, but there are options out there. My preferred lending partner offers a no-cost refi when rates come back down in the next 6, 8, 12 months or more out. There's also 2-1 buy downs that are very, very popular right now, which actually reduces the mortgage rate 2% for the first year, 1% for the second year, and then resets to the current rate in year 3. The idea is in that time, rates will have come down and you'll be able to refi. Should you just wait for rates to come down before doing anything? Only you can decide what's best. And remember that as rates do come down later this year, which is what's forecast, home prices are only going to keep going up. So are you actually going to be saving any money? Everyone's situation is different. Everyone's situation is unique. And the best thing to do in there is to get with your mortgage person, or if you'd like me to connect you with my preferred lender, and run those numbers, run that scenario to see what makes sense for you and your particular situation. So that's what's going on here in the Frisco market currently. Hopefully you find this information useful. If you haven't done so already, please subscribe to this channel. I put out videos each and every week updating you on the latest what's going on in the market here in Frisco. And if you have any other questions whatsoever, please don't hesitate to reach out. You can always email me at andrew@theandrewsmithteam.com or feel free to give me a call at 469-296-5230.